Boom. So we're looking at TradingView. We're going to everything from A to Z of how to navigate TradingView and how to make a good looking chart. So first off, we've got this white background. It's super, super white. If you are opening up TradingView for the first time, you might have volume bars at the bottom. Whenever you have an indicator or volume bars at the bottom, you can literally just click on those and press delete. You're going to click on the indicator. You're going to click on the volume bars at the bottom, click delete so that they can go away. All right. Why? Because we don't want a whole bunch of indicators. We don't want a whole bunch of lines and things all over our chart distracting us from our mind, from our attention, from our focus, from being able to trade and analyze the charts correctly. Now, next up, we've got these vertical lines and horizontal lines in the background. They can also be distracting, and we don't want a whole bunch of stuff in the background here. We want to make this really clean, look nice, reduce stress, and make sure that we have a good time trading and not be bored or anything like that. So we can make it fun. We can make it interesting. We can change up our colors all over the place if we wish. And we want to manage our money correctly and manage it well while we're trading or while we're analyzing the markets to invest. So with that being said, I'm going to double click the screen. This is how we can get to settings. This is how we can get to settings and change a lot of the indicators and how the chart looks here. So I'm going to go straight to, first off, actually, you can change the chart from dark to light. So you can go to color theme and we can change it from light to dark. Some people like dark so that it's easier on your eyes and not so hard to look at constantly, especially if you're looking at the charts for over an hour or more. It's in the evening time. You want to protect your eyes so that they're not so hard. The other thing I would suggest, though, are blue light glasses. If you get blue light glasses, you block the screen from the blue light to protect your eyes so that you are not ruining them, especially for the future going forward. Okay, we don't want poor eyes. Actually, I should be wearing these right now, but I'm not going to bother with them right now. Anyways, double click this again. I'm going to bring this back to light for fun right now. You can click on settings and we're going to change the appearance so that the vertical grid lines and the background look the same. That way, we're not going to have a bunch of random lines. So I'm going to change this to a little bit of a lighter gray color. Okay, we can change the color here. Same thing here. I don't want these grid lines being shown. So we're going to make the background, the vertical lines, and the horizontal lines the same exact color. Hopefully. Did it work? Did it happen? Solid. I want it to be solid, gray background. If you did want the lines, you can, of course, change how the lines look right here, dotted, whatever you want to do. All right, scales, you can change the scales of the color of your scale over here. Crosshair, that's all you really need to know on here. Symbol is where we're going to change the colors of the candlesticks. I like mine to be blue and black. Some people like whatever they would like. At the beginning of this call, before I started recording this, I did mention that we may not want red candles. Red candles can create a lot of stress and a lot of emotions when we're managing our money and trading in the markets. We don't want stress and we don't want high level of emotions while trading. We don't want to be dead. We don't want to be a zombie and be emotionless because we're human beings mostly, right? But we don't want, so we don't want those high level emotions. So I'm going to change these. The left-hand side will be the bullish candles, the candles that go to the upside, to blue. All right, we're going to change these, actually this blue. I'm going to change these to this blue over here for the body, the borders, and the wick so that it's all the same. On the right-hand side, we've got the bearish candles, the candles that go to the downside. I'm going to change these to black so that we've got blue candles that go up and black candles that go down. Now, right now, to be honest, this does not look super hot. The gray actually looks like it's inflecting with the blue a whole lot. How I'm going to change that, though, is actually just by changing my chart from light to dark. So I changed those already. So I've got clean colors. It's not going to cause unnecessary stress in the mind or the emotions while trading. and managing money, it looks fairly clean right now. So I'm just going to click OK. And you can actually up here in the top left-hand corner, click on Save Layout. Save Layout. So anytime that you change your chart, guys, you can click on Save Layout so that whatever you've done to your chart, the lines, the Fibonacci, the everything you got going on that we'll talk about or that you learn about going forward will save or auto save. So every 5 minutes that you're changing stuff up and you're on here, it'll automatically save. I actually have that on already. So it's all good. Now, I'm hyped. I hope the people who are watching this right now, if you're watching the recording, I hope you're hyped and excited to be learning the skills of trading. Because once you guys learn these skills, guys, it'll pay you for life, right? You learn the skill of trading, you learn the skill of duplicating your income, your money. It's not a skill that anybody can take away from you. The markets are never going away. Bitcoin and crypto is not going away. So once you take the few months, the year or two to really get this skill down, it'll pay you forever. So that is exciting. We want to be excited. We want to feel good about what it is that we're learning. So anyways, I'm going to double click this again and click on color theme and then click on dark. And when I click on, oh, I changed it again. I don't know why it's doing that, to be honest. So that's unfortunate for this recording and how this is looking right now. But save as. Wow, I do not know. Yeah, like I said, guys, I don't know why it happened like that, but I'm just going to quickly redo everything. I just changed it to dark because I want the sides to be dark, but now I got to change my background and everything again. Hopefully I find a way to save it so that it doesn't do that. But just going to quickly go back, change all this to make it look nice again, and then we'll move forward. So right now I just quickly changed the candlesticks and those things. Obviously it looks terrible right now, but I'm going to go to appearance and then change everything here. So background, changing to light gray. All right. Oh, solid. I want to change this to solid. That's why it's looking funny. Change that to gray. Vertical lines to gray. To gray. Something else happened here in this process. Oh, scales text are gray. So I definitely want to change those back to black. There they are. Okay, that's what I was trying to figure out. The prices and everything was still gray. So there you go. The best thing you can do, it's like getting a new phone, guys, right? If you get a new phone, like let's say you switch from Apple and you used it for years and then you go to Android. Well, you're going to want to play around with your phone, figure out the buttons, figure out the navigation of everything so that you know what to do with your phone and how to manage it well. And then eventually you forget how you use the Apple iPhone, and now you're an expert at navigating around the Android phone, right? If you think about it like that. Right now, the blue candles don't look super hot, so I'm just changing them to a darker blue for now, at least. And now this is what the chart looks like. So this looks a lot better. It's fairly clean, right? We got the both sides of the candlesticks here, and life's good. Okay, cool. Now on the right-hand side, I want to point our attention to the right-hand side where we have watch lists at the top, guys. So we have watch lists. You can create lists of things that you might want to analyze. So I can create a new watch list, or sorry, the first thing I'm actually going to do is just delete everything. Okay. I don't know what's here. I don't know what data feed these are all from. Because when you click on a currency pair like BTC USD, great. I'm looking at Bitcoin. I want to analyze Bitcoin, but the data feed where it's coming from every time is going to be different. So if you look at BTC USD, you're going to have Bitstamp, Coinbase, you're going to have Bitfinex, Binance, you're going to have all these different exchanges that are presenting to you different data feeds, and they'll all be just a little bit different in price by a few, by 10 pips, 20 pips, 100 pips even maybe. So that's very, very important. So having said that, I don't want just random data feeds or anything like that. I'm going to delete everything from here. You just highlight the pair, click on the X, and you're going to delete everything that's here. All right. I'm deleting everything that is here. The stocks, the Dow Jones, everything I don't want. Okay. Personally, do not give a hoot. I do not give a hoot about Apple or the Dow Jones or anything like that. I really, really care about crypto. So I'm going to create a list. Create a list, sort your symbols better with more watch lists. All right. So how you add a currency pair to your list, guys, you're going to click on the plus sign here and you can add whatever you want. BTC USD. Whoops. Now here's a trick for Bitcoin. Those of us new or watching the recording, here's a trick for Bitcoin. When you pull up a Bitcoin chart, Bitstamp, I'm going to pull a Bitstamp. You want to make sure that it's going to show you everything from 2013 as well. So I changed the time frame here to the weekly time frame. So each of these candlesticks are worth 1 week of time. But Bitstamp is not showing me the 2013 and 2015 years. And that's not what I want. I want to be able to analyze history if I want to. If I want to go back and analyze history, oh yeah, guys, this is looking pretty good right here for Bitcoin. This area. We might come down and grab this liquidity underneath here and then reverse to the upside. Or we are going to stall here for a few days, a week or two. And then hopefully we're going to reverse right back up. But it just depends on what happens. Anyway. So I don't want this Bitstamp really. I want to go back. I want to search BTC USD. I'm going to try Bitfinex. Okay. I'm going to click on Bitfinex. I'm going to scroll out again, zoom out, and we're getting closer. It's showing me 2014, but not really 2013. Now, why is that important? Because history doesn't always 100% repeat itself, but history definitely rhymes. They're going to be similar. All right. Just like Earth and the world. 100 years ago, there was a, how do you call it? I'll say health crisis. When this goes on YouTube, you got to watch what you say, right? So there was a health crisis 100 years ago. Ice ages have been repeated over and over again. Economic crises has happened over and over again. Everything comes in cycles. People have tried to explain it before, but anyway. So history repeats itself, all right, or it's going to rhyme. So I'm opening a Binance now. Binance isn't showing me anything. Okay, these are not. Oh, maybe it just needed a time to load. I'm not sure. Here's Bitstamp, guys. Bitstamp does go all the way back to 2013. So here's 2013. So here is where we're probably at in terms of where the price is right now. We're just waiting for this big parabolic move to the upside, maybe to 100, 200K for Bitcoin. Just like in 2017, we went up a significant amount. We came down, we went up, came down a significant amount, right? Like from 5,000 US all the way down to 3,000. So not quite a 50% crash, but just about, right? Almost there. And then we took off and skyrocketed, called a parabola. This is called a parabola, guys, going straight up almost to the upside. And then eventually we get so overbought, so maximalized out that people take profits and then we just absolutely crash and get demolished. So right here, anything could happen, of course, right? Don't take what I say as the thing, but study Crypto Picasso. But right here, guys, I think we're kind of like mid-cycle and we're just getting ready to go straight up to the moon. That's the hope. So that's Bitcoin. So then you add more pairs. You add whatever you want here. ETH/USD. Perfect. There is Bitstamp for Ethereum again. Amazing. I'm gonna open up Ethereum now. And we've got all the way back, well, to at least 2016. And here's the market cycle for Ethereum from 2017, right? Absolutely insane. Personally, I just sold a few items and bought a little bit more Ethereum. We may not see Ethereum below 1500 ever again. Okay, we may anything could happen, but we may not see Ethereum below 2K, below $1,500 ever again. So I chose to buy a little bit more Ethereum. Fun fact. All right, so you can add whatever you want there. Really, really important. Share list, make a copy. Cool, not too important right now. If you want to widen your screen, guys, you want to widen your screen, make it a little bit bigger, you can take this whole row out by clicking this top button on the right-hand corner up here. And boom, now you get a wide, super wider picture of everything. So Bitcoin, for example, I get a little bit wider picture of the whole thing just by doing that. Click it back, and now I got this information here again. Okay. There's a bunch of tools over here. We don't usually need it or use it too much, but play around with them, right? News. You can set alerts. You can just do that actually by double clicking the screen. So let's say I want Bitcoin. I want to know if and when Bitcoin ever comes to this area again, either to hopefully see this pass through and go to 100K, or maybe I want to look to short and sell Bitcoin from this price. If I want to do that, I want to set an alert. So I'm going to double click this thing right here, add alert. All right. Show up, pop up once. You can change the price to here. All right. You can type in whatever you want. So maybe I just want to know when it hits 60,000 again. Bitcoin at $60,000. Type that in, press OK, create, boom. Now I've got this alert here. Okay. So when market goes up there, I'm going to get a notification to my phone. I'm going to get a notification here on my computer letting me know that Bitcoin hit 60K. Or I can exit there. Yes, I want to delete that because I don't care. I'm just buying Bitcoin forever. Okay. But when you're trading, you might want to know when price is going to hit certain levels, right? That's why that's important. There's not too much else over here, guys, but all right, cool. So that's that. I'm going to go back to here, the watch list. Boom, currency pairs. Awesome. So we're on Bitcoin. I'm going to take this out for now so that we have all this. There's setting buttons up here too, but like I said, we just double click the screen and you got the settings there. If you ever want to share a chart, okay, let's say you got private group chats or people that you talk to, converse with, and you marked up your Bitcoin chart, you can click actually the picture sign here and you can take a snapshot of it so you can save your image of the chart. So let's say you mark up a whole chart and you want to know what it looks like now, and you want to know if your idea played out, if your analysis played out in the future, a month later, a couple months later. Well, you can save the image for what you've got planned out right now, and then you can take another screenshot later down the road, and then you can compare the two. You can compare the two ideas that you thought originally versus what actually happened in the market. So if you're learning about trading, you're learning about how to analyze this, that will make sense to you, and that could be a great tool to help your learning. But the other thing you can do is click on copy link. So you can go here, click on copy link of the chart, go to your private group chat or wherever you want to send it to. All right, so I got the UK squad right here. Paste the link that I copied, send it out, and boom, the chart's there so anybody can kind of see it and view whatever I'm looking at or whatever you're looking at. right? Okay, next on up here, guys, to the left-hand corner at the top, you've got templates, either save templates that you saved yourself or different things that you can search. I don't really use it too much. Indicators. When you click on indicators, this is where you can search different things that you might want to add to your chart. So like I said, we don't want to add too much at a time. And on a free trial account, you are allowed 3 indicators. They allow you to have 3 indicators on your chart at one time, okay, for tradingview.com. So let's say we want to look at, oh, I've already got moon phases up here. But if I delete that, yeah, take care, Sol. We'll talk soon. Add indicators. You want to add moon phases, you can add moon phases. All right. And boom, we got that here. This obviously looks absolutely crazy because we're on the weekly time frame. But you can change the time frame that you're on up here. So the W, you can change it. You can change your time frame, which means each of these candlesticks are going to be different now. So right now, each of these candlesticks are worth 1 week of time, 1 day of time, 4 hours of time, etc. So if I want to look on the 4-hour time frame, I'm going to click on 4 hours, for example. Now I got the chart for the 4-hour time frame, and each of these candlesticks are worth 4 hours of time. Now, the moon phases actually make a little bit more sense because there's the 2 moons that we're looking at in 1 month for the period, right? Anyways, I'm not going to look at those right now too much. We're going to exit that. What I might want to add on are EMAs. So you got EMA, exponential moving averages. Nick Gomez, for example, looks at these all the time. So I'm going to add EMA 20, 50, 100, and 200, for example. And now I have the indicator for all 4 of the EMAs that Nick Gomez kind of looks at, and we can trade off of. When you go to settings for the indicator up here at the top left-hand corner, you can press the I to either hide the indicator or show it again, right? Clean up the chart, analyze your price action, the what you're looking at here, or click on the I, show the indicator, and you can see it presented there. When you click on settings, you can change the settings of the indicator. Maybe the colors, you know, which indicators do you want to look at? Do you want to look at the 50, the 100, and the 20, and the 200, all 4 of them? Or maybe you just want to look at a couple of them. You can change the colors of them. So for example, I do not like orange. I'm not a huge fan of orange. I'm a little bit even more of a fan of pink, or something else than orange. But anyway, you just want to be able to see it. You want to make sure you can see the indicator green. That dark green down here looks a lot better than it did when it was orange. Right? So click on dark green, boom, looks a lot better to me. Okay. And that's how you change those settings. And that's for any indicator. Right quick, I'm going to hide this one. I'm going to go back to indicators, and something that we should all know about, which is why I'm going to show it right now, is the RSI. Either the RSI for the relative strength index, or even sometimes what's good is the stochastic RSI. Okay, stochastic RSI. Click on that, and it'll show up here at the bottom. Now, yeah, so there's a white line down here that allows me to manage how big I want it. So what do I want? Oops. Do I want the stochastic indicator looking really big and get a close look at it? Or do I want to lower it so I see more of the chart and just have this as a little bit of a guidance, a little bit of a view on here? You can change the settings of it, like I said, right here. You can change the template for whatever you want right here. Usually the default settings are really good. Well, I'm not going to get into kind of how to use it too much right now, but style, same thing. I don't want like gray upper band. You know, I might want to see. Oh, the upper band is here. Where's the white line? Visibility. Maybe I can't change that. I don't know. So you can change the background in here, for example. Upper band, you can change these lines to a full line or dotted line, whatever you see. This dotted line right here at the bottom, I can change it from a dotted line to a full line. All right, that might be better for you. I don't know. And then inputs. Hang on. Disregard. Oh, sorry. Yeah, up here, upper band. Upper band I have is as at 80 right now. And then the lower band is at 20. I'm actually going to change that to 70, 30. Sometimes support levels can bounce off of the 30 down here rather than 20 if I were to change it like that. So 70 and 30, boom. Can sometimes act as resistance or support in the market, for example. Okay. Like right here is an example. Like right. Okay. Like I said, I don't want to go into too much depth right now. I want to show TradingView and make sure we're getting the value of how to use the chart. So that's that. I'm actually just going to exit this right now, so it's not on here too much. So that's indicators, guys. Time frames we talked about. You click up here, click on the time frames. You just change the time frame that you're looking at. So this is the 1 hour, which means each of these candlesticks are now worth 1 hour of time. Look at this wick. This wick today was early this morning was massive. 7 a.m. time Eastern on the 24th here. We got this massive wick where price just came way up and then smacked right back down after filling in this imbalance over here in this candlestick here. So really, really interesting. And actually we had this one that filled in this space, and that's not by accident, guys. It's not by accident that the market came up to here at this candlestick and then smacked right back down. If we go to the 4 hour, I think, yeah, you could say the 4 hour, we actually either have something called an order block / institutional candlestick that took place right here. And anyways, there was a position that was open here. The market made its way back. The position was closed off over here. And now we've got this bearish downward momentum coming down. Okay. Millions of dollars, millions and millions of dollars is being moved. It's being moved throughout the market all the time. Okay. Just so we're aware of who's actually moving the market and how it gets impacted. Okay. Up here, guys, we've got bars, candles, and line chart, for example. Don't need to know too much else. Bars, garbage. Don't really need to know that. Candles is your candles. The majority of the time, we're probably going to look at that. But the line chart could sometimes help us understand support, resistance, and where the charts might go. So if I click on line chart, we can see really quick how, for example, there is a level of support right here. Level of support right here. Touch, touch, touch. When the market came back up, it actually didn't go up there. So this is a terrible example. But sometimes, usually, the market will trade back up here, act as resistance, and then continue to the downside. That's where the line chart would kind of come in, like over here. Okay, we had touch. There was a fake out here, touch a little bit there, right? But then when we broke this level of support and traded down, the retest came back up, smacked that area, and then came back down. Retested again, came back down. Okay, so that's the importance of the line chart, to kind of get a clear view of how to read some of this. That's just an example. Okay, it's just an example of what to see. Okay, can't make this up. Resistance, a little bit of manipulation, fake outs here. We came up, traded down, boom, support, go to the upside. Okay. So that's why you would use a line chart. Usually on the 1 and 4 hour time frame is really good to look at that. Candlesticks, go back to candlesticks. Now, guys, there's about five more minutes. Got about 5 more minutes. Oh my gosh, before the next call. So really quick, Might need a few more minutes, but anyway, really quick, guys, on the left-hand side, we've got tools and resources over here. So I'm going to click on this line over here. We got trend line. All right, so I'm actually going to star them. You can star whatever you might use. Really, I'm just going to star the trend line. I'm going to star the arrow. I'm going to star the horizontal line and the horizontal ray. That's about it. That's really all you need. You just need a couple arrows to identify where you think price might go, some trend lines to analyze trends, horizontal lines to create your supports, resistance, whatever you might be doing with your chart. So for example, if I'm doing a trend line, I might want to see where a trend might be forming. So check this out, right? If I take a trend line from this high here to touch this resistance here and drag it all the way down, well, what can we see? Actually looks really good. Okay. We can see that this trend line actually got respected here, here, and we were downtrending, and then we broke out. And this is how sometimes the market can get manipulated and you can get faked out sometimes, because at this point, a lot of people were probably trying to buy here. A lot of people were trying to buy, but the market actually just ended up trading back down and kept going. Liquidated people's accounts, and it wasn't very good for people, obviously. That's why risk management is so important when it comes to your trading and managing your money well. Okay, guys. Now, anyways, the trend line, though, it got respected, though, as support on our way down. Support, support, support. And now it's formed support a couple different times in the last few days now. So this could be a good sign. This could be a confirmation that, yes, we're going to stick around here, maybe fill in this gap again, and then really go to the upside after. I really don't see us trading below 30K, 29, 28K ever again. If it happens, it happens, but something would be dangerously wrong with Bitcoin if that were to take place. So like I said, guys, watch Crypto Picasso. You'll understand. It's all good. If you do not know who Crypto Picasso is, reach out, send a message so we can talk about it. So that's trend lines. Trend lines. It's just an example of trend lines. Okay. Now with crypto, we really don't want to focus on trend lines too much, to be honest. It's not the end all be all when it comes to the market. It's just a tool. It's just a tool to help us analyze trends. Even here, like, it doesn't even make sense, right? Doesn't even make sense right now. Actually, this is interesting. On the 1 hour time frame for Bitcoin, we do have a high here. If you drag the trend line down to the resistance zone that was made here and kept going, it did respect it. We did get respect off of this price level, off of this trend line from the wick today after the news. All right, very, very interesting. And this right here would be considered a fake out. It's a fake out. If everybody in the world plants this trend line, the market breaks out and they're like, oh yes, it's time to buy. Everybody buys. And then the market, the people controlling the market, you could say, haha, JK, not today, folks. Sends the market down. People lose money, and it's not a good time like that. So anyways, follow the education, manage your money well, use risk management when trading at least 1 to 3, at least 1 to 3 risk to reward ratio. Now, how do you decide that? Well, there's this tool over here, actually. You click on this tool over here. We got long and short position. Yeah, exactly. Exactly, Patrick. After the Fed meeting, you got it. The Fed meeting today to discuss the rates / interest / inflation / whatever money for the world. Okay. Alfie, if you want to invite Jack on, invite Jack on, bro, definitely please do so. Please do so. Okay. Over here, guys, we got the long and short side over here. So what that means is long means going up, long positions. You are buying the market, hoping that we're going to continue to the upside and profit on the way up. Short means shorting. You're going against. If you have not watched The Big Short, watch The Big Short. It's a movie that was on Netflix a little while ago. I think it was recently taken down a few months back, probably because of the money and economic crisis that we're experiencing / about to experience right now. Anyways, I'm not going to get into that. This is supposed to be a TradingView video. But shorting just means going against. So you are placing your money on the fact that the market is probably going to go down. So you've got a $500 account. You want to duplicate it. You place a sell position at a high. Market goes down. You make money on the way down. That is how trading on the MetaTrader 4 works using leverage trading. Okay. Anyways, long. I'm just going to do the long position for easy math right now. Let's say, in this area, I think the market's going to come down, fill in a little bit of this spot, and then continue to the upside. Well, I can do that in a number of different ways, but actually, yeah, I won't even bring that out right now. I'm going to bring out the long position tool, plant it right here. I might want to take a buy position, maybe about here in this area, and then stop loss below the low. This isn't how I would usually trade. I'm just providing an example of a 1 to 3 risk to reward. Okay, this is not the end all be all. I'm not telling you to buy here. I'm not saying that. I'm just saying that when you're planning out a trade and when you're identifying in the market, you want to make sure you're taking a minimum 1 to 3 risk to reward. There's the risk to reward right here. See how it says 3? That means you're going to risk $10 for your stop loss. You're going to risk $10 to make 30 minimum, or you're going to risk $100 to make $300 minimum in the market. That's what this can help indicate. It can help you visualize your trade and what you're looking at in the market. That's why this is important. But if we do take this trade and it goes well, we can take profit right here. We can take profit even closer to this high over here as well. So if you did do that, cool. That's at least a 1 to 5 risk to reward ratio. So guys, if you lose 3 or 4 trades in a row, but on that 4th or 5th trade, you win it at a 1 to 5 risk reward ratio, you are now in profit. You're still in profit for your trading career, for your account. That's how trading should be. You should be able to lose 3 or 4 trades, win the 5th, 6th, 7th one, and be in profit, or at least at break even. Okay. That's why risk management is so important. Anyways, there's a little bit of TradingView tutorial along with trading mindset here. Okay. So that's the long and short tool. Trends, horizontal rays, right? You can plant your supports, plant your resistance. For example, you just click on it on this button over here and you can plant whatever you want. The horizontal ray is cool because if I'm looking at a specific candlestick, like this one right here, it's pretty straightforward. I want to identify that one specific candlestick, and then you can change the color of it. I'm going to double click it, change the visibility, style of it. I'm going to change it from blue to maybe red, or blue to maybe yellow, whatever you want to do. Okay. It's a line, coordinates, visibility, text. Yeah. Okay, cool. Same thing with this one. I want to change it from blue to yellow. Awesome. Now I got my 2 yellow lines here, potentially maybe looking for a buy position in the market down here, if this is the bottom and we're looking to go to the upside. That's how that works. All right. If at any point you got so many lines on here and you just don't know what you're doing, well, you got too much going on, you can remove everything. You just double click, remove drawings, and move on to the next. Okay, cool. So that's that. The next part you might want to look at is over here. We've got brushes, rectangles, ellipses. Now, all of this stuff I actually do in another video, but ellipses you might want to identify lows and highs in the market. This can help identify and visualize market structure. All right, we've got high, we've got a low, now we got a high. The question is, are we going to get a higher low? And if we do, we could be looking for buys and continue to the upside here. But if we don't, and we actually keep going down and create another low, we won't be looking for buys. We're gonna look for, like, if we break this low, we're not going to be looking for buys necessarily. We're going to look for maybe a sell to sell down to the next lower low. All right. So anyway, that's just an example of ellipses. Rectangles, you might want to plant zones. Right. This would be like a zone. Resistance and support areas. Look at over here. We had resistance, resistance, resistance. We traded to the upside, and then we had support, support. So it's not always going to be a specific price that we're looking at. It's not always going to be a specific one line area. We're always identifying and looking at zones. So this is a zone now, and up here is a zone, for example. Okay. So if we continue all the way across, let's say the market from where it is right now over here, let's say we trade back up. Well, we can identify and we can assume that we're going to come up, and let's say we smash through this resistance. We're probably going to go up to a certain point, retest a high over here, bounce off of it, retest the support level again, and then go to the upside. That's how you would utilize arrows to kind of plant things up, right? So that's just an example of something. Okay. The last thing, guys, you can measure pips with the measuring tool over here. Okay, so from the bottom, how many pips might that be? Well, from 34,500 to 38,000. That's a $3,500 difference. Every dollar of Bitcoin is worth one pip, $3,500 difference. That's going to be 3,500 pips, right, in the market. Okay, so that's a measuring tool. So how you would do that is you just drag it from one point to another, and boom, up here you see the pip value, 4,138 pips, for example. Okay, from the space on the 1 hour time frame, from here to here. Whoops. This isn't too important, but I just thought I pointed out, from the space from here to here on January 26th or whichever is going to be 1 day and 9 hours away and 33 bars. There's a lot of good information here that you can help identify. All good, Alfie. We'll talk soon, bro. All right. Okay, so that's the measuring tool, and there's not too much else that we need except for Fibonacci. I'm not sure where the man is. Okay, Fibonacci tool, guys. I do not want to end this without going over Fibonacci. So I'm going to go over here, click this little button, and the only thing that we really need is I'm going to star Fibonacci. Fib retracement it's called. And that's it. That's all I'm going to do. I'm just going to start Fibonacci. We really only need Fibonacci retracement here. Okay, guys. So that's what you want to do. That's what you want to look for. All right. All right. So I'm going to click on Fibonacci, and all you do, guys, is you drag it from one price. So for example, the low to a high. And that's how you plant your Fibonacci. Now this looks terrible. Okay. This looks terrible right here. Not terrible necessarily, because it's just a zone, right? In between the Fibonacci levels are, you can call them zones. Price is going to respect different Fibonacci levels. Now, if you do not know what Fibonacci numbers are, that is okay. Some people do, most people do not. And when I first started learning how to trade, yeah, no problem, guys. Take care. We'll see you tomorrow. When I first started learning this information, I had no idea about the charts, how to analyze this information, or anything at all. All I knew was that this skill and learning the charts and learning how to invest was going to take my life from a regular 9-to-5 life to something more abundant, be able to retire my parent, my mother, you know, travel the world, make money from wherever you are, right? Whatever your goal is for financial wealth, that's what this can allow you to do. So I'm just going to go to YouTube really quick and search Fibonacci. Can't spell it. Fibonacci retracement, for example. There's a couple of videos there. But I really just want to get the explanation as to where the Fibonacci numbers come from. All right. So if you search Fibonacci numbers, you're going to see videos that explains the mathematics behind Fibonacci sequence. Now the 618, like it says right here, the 618 number, 1.618, shows up in everything in life. Okay. The snail shell, trees, our DNA, retracements in the market. Okay. All of these things occur in everyday life. Now this is something else that's going to be a lot of information to take in if you're just learning about, you know, moon phases, for example. Okay. But you can search it, and these videos will explain the Fibonacci sequence and understanding where the numbers actually come from. But so that's that. So you might want to watch it. It's just one number, and then you add another number, and then you divide them, and then boom, you're always going to get 618 kind of thing. Those videos will explain it more. So these numbers and these levels in the market, whoops, that's not where I meant to go. Where's TradingView? These numbers and the levels in the market are going to help identify specific zones in the market. Now, before I even show that, I need to make sure that this looks clean and nice. So I'm going to double click this. I do not want a background like that on my chart. That's for sure. So I'm going to go to visibility. I think, no, style, trend lines, scroll down, background. You can increase how it looks, or you can decrease the potency of the background. So I'm actually going to decrease the potency of the background to nothing. I don't want anything. No background. I just want the lines. I also want the lines fairly thick so I can actually see them on my chart. So line thicker, thickest. You can change the levels lines here. That's the thickest. I don't want that. Probably just the second one looks great. There's a lot of different colors going on. I don't necessarily want that either. So that's how it looks like right now. Okay. Got a good amount of levels here, but this is how it looks right now. It looks like a rainbow. Looks like a painting. I don't want that. I want it to look clean, fresh, or, you know, like that. So anyways, not going to explain the levels too much other than these are all what are important. You got 0 to 1, 0 to 1, and any in between 0 to 1 are the Fibonacci levels. 0.236, 0.382, 0.5, 0.618. Those are all important. And I'll just say this right now, for crypto trading, shallow retracements, you're going to use a 0.236 and maybe 0.38. Not so shallow retracements and really aggressive moves to the upside or the downside, you'd be using those levels. More shallow retracements, my bad. More shallow retracements are going to actually be the 61.8 and the 50% levels, and maybe even the 70. So I actually need to, I want this level actually. We need to add 0.70 on here because it's not here. The 70 level is also important. I'll explain a little bit more about these in a minute. And then the Fibonacci will probably be the last thing for this Zoom. I don't really need this one too much. If I do, you can always replace it. But I'm going to check this box off, and I'm going to make sure I have the 0.70 level on here. Really, really important. And I'll explain why after. So that's how you do it. You add that level on there by typing in the number, making sure this is clicked off. Now you can change the colors. Okay, you might want to change the colors of your Fibonacci levels. So for example, if I'm buying or selling, this is just an example, but the 61.8 and the 50% levels, I might want to leave them actually as darker green, because green represents kind of buying, and that's where I want to buy. So I'm going to put these actually as green. The reason why is because between the 50 and the 61.8 zone is like an actual zone where the market typically retraces to, and where you're going to want to either take buy or sell positions in the market. So that's explained really quick. Now the other two levels that are, I think I got that mixed up. More shallow, less shallow. More shallow? Yeah, more shallow. I got that mixed up, I think. Anyways, 236 and the 0.382. I actually kind of want to make them the same, similar to. I'm actually going to make them yellow. Yeah, yellow, like a bright yellow right now. Boom. And then you can make them whatever you want. Actually, for the simplicity of this call, for the simplicity of this recording, I'm just going to make these black. I'm going to make everything black. Everything black right now, except for 61.8. I'm actually going to make red, and the 70% red. 70% red. 50% red as well. But everything else I'm actually just going to do is black. Much easier to read and look at right now for anybody new looking at the charts and analyzing this information. Boom. Yeah. Way, way better. All right, cool. So once you have your Fibonacci the way you'd like it, either the colors and the numbers that you want on your chart correctly, you're good to go. You can choose. I'm just going to leave those on there. Okay, cool. So once you're done, you just click OK, and boom, now you got your settings set up for the Fibonacci. Press delete, or it removes the Fibonacci off your tool. Now, how does this work? Now I'm going to click on Fibonacci again, and what you do is you plant the Fibonacci from a low point to a high point. Okay, so from a low point to a high point, if you're looking for a retracement to the downside. So this is just an example, not to be taken super seriously, or like this is definite, right? Like this is it. No, this is just an example for how we would analyze the chart and be able to predict where a retracement might go to. So I'm going to click. I've already clicked the Fibonacci. I'm going to click, line the cursor up with the bottom, click the chart, and drag it from this low to the high. Now, this is also something that you might want to do. Right now, the numbers and the price levels are actually on the left-hand side. Okay. You may not want that because right now it looks like a mess. It's hard to see the numbers, blah, 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 blah. You can actually click this again, go back to settings, and click reverse maybe. Oh, maybe not. Visibility maybe. Nope. Style, levels, extend, lines, left. Whoa. I guess if you extend lines left, the lines and the levels will go all the way across your chart to the left. Really interesting actually for back testing the charts. What I'm attempting to do right now is switch the values from the left side to the right side. So there we go. I did it. All right. So I just went to labels and it was on left, and I just want to change it to right. So now the level's on the right side, and I can see the numbers over here without it getting interfere interference with the candlesticks and the price action that I want to look at. Why is this important? The market is going to test. It's going to test and respect specific price levels. Now here, it actually went past a little bit past the 38% level. Pretty interesting. We can also drag it to here and it actually respects it there, but I like going from wick to wick. So that's that. But right now we made this low January 24th. So yes, 2 days ago in the market at 8 o'clock in the morning, we traded to the upside until 2 p.m. in the afternoon, Eastern time. We made this high, we made this wick. Now what we want to do is we want to identify where the market might be going. So it's definitely going to retrace either to the 38 or maybe even the 50 or maybe even the 61.8 and 70% zone before continuing to the upside. Maybe, right? This is a possibility. It's a possibility. So that's how we can identify where price is going, because the market is attracted to the Fibonacci levels. Like I said, the Fibonacci retracement tool numbers, they show up everything in life. Some pieces of artwork, all right, just the sequence of life in the universe itself. Okay, it can't really be explained. You can also look up Nikola Tesla, I think, and research Nikola Tesla 369, the power of those numbers and what they hold. You can Nikola Tesla and maybe Fibonacci numbers too. I'm not sure. Okay, talking about vortex math and manifesting, but that's a whole nother topic. Okay. Nature's code. That's how you can describe it. Nature's code. It shows up everywhere in life. And then the market, it does as well. It does as well. So let me provide another example of this so that it makes sense to you, those of us who are watching this. So check this out. I believe from this high over here of April 21st, April 14th of 2021, a high was made here and then a low. So April 14th, there was a high of 2021, and then there was a low April 24th, 26th area down here. So what you would do is you want to try to identify how far is the market moving up before collapsing and continuing in the direction. When is that going to take place, right? So you're actually going to drag the Fibonacci from the high, to the low. And that's what I was going to say. It was either going to hit the 61.8 or the 70% level. Sometimes this is a nugget. Sometimes when there's a major correction like this, okay, like we went from an all-time high all the way down to 30K, right, for Bitcoin. That's crazy. When there's a major correction, like a major turning point in the market, I have noticed it usually does go to the 70% line. Okay. First, it's probably going to go to the 50 or the 61.8% as a fake out, or like everybody's going to do that. Everybody's going to sell from 50. Everybody's going to sell from the 61.8. But what actually ended up happening is we tested the 70% because that's how they want to manipulate the market. It actually also lined up with this candle and the bottom of this little wick and structure right here. So that is also really interesting to point out. We filled in an imbalance over here and tapped this and then continued down. Anyways, that's a whole nother topic and thing. But you can see how the market came back up and it retraced to the 61.8% zone. It did hit the 70 like we talked about, but that's what you want to look for. So that's how you change, the settings of your Fibonacci scale. And, different educators, different people that you learn from are going to talk about different levels maybe. But deeper retracements, you got those, the 70%, the 61.8% for the deeper retracements, or maybe even the 78. More shallow retracements, I think I'm using that word correctly now. The more shallow retracements is going to be the 38 and the 23. Even if I drag from this high over here the wick here, really curious. Boom, there you go. 50, 61.8% zone. Okay. You can't make that up. You can't make that up, right? What's another example? All in here, pretty much. If we drag the fib from the low over here, drag it to the high, it might be the 50. Yeah, 50% zone. Boom, tap, go up. If we drag it from this high over here to the low that was made here, boom, tap the 61.8, continue up. Okay. Same thing, same thing, same thing. And it works on all time frames in all scenarios. Even this high here to these lows to this high here, we'll be able to see a Fibonacci retracement level. So if I drag this from the high, I think I'm doing this right. From the high over here, drag it down to the low. Well, what are we going to see? Look at that. It literally tapped. See, this was a shallow retracement. It literally tapped the 38% zone by the wick. Just a little bit by the wick, and then boom, continue to the downside. Okay. Now the question is, how do you know? How do you know which level it's going to go to? You don't. You don't know. But when you are analyzing this, you really just want to make sure that you're lining up a fib level with price action. You want to line up the Fibonacci level with price action. Where has price been manipulated? Where was there different candlesticks that were forming? And that's probably where price is going to go. The best example is actually right here. From this high to this low. This is a great example because in here, there's actually a little bit of a space. It's called an imbalance in the market. Okay, I'm not going to get into what that means or how to read that right now, but there was an imbalance right here, a big selling pressure, lots of space. Okay, the market has to come back and at least hit 50% of this, or maybe even fill in this whole area. Maybe even fill in this whole area before continuing to the direction that it intended to go. Now, so how do you know if it's going to hit the 50 or the 70%? Well, we have to at least fill in this space by 50% of it, or tap just right underneath that candlestick before, probably before going down. So if you take this rectangular box, for example, and you drag it all the way across, boom, now we have our zone. Now we have a zone that we're looking at. I'm going to drag the fib from the high to the low, and we can see, oh my gosh, the 70% level lines up. Also the 61.8% level and the 70% level lines up with our zone. And that's probably where we would have wanted to take a sell position. Oh my gosh, take a sell position, take the short tool, plan out your trade correctly, right? Take profit 1 down to this low. Now, why did I do that? I wanted to take the sell at the 61.8% level, probably. And I want to put the stop loss above the previous candlestick over here. I want to put the stop loss above the previous little bit of a high, a little bit of a candlestick here on purpose, because that was made there on purpose. Okay, a little bit of buy, a little bit of sell. All right, after filling in the imbalance, you could say. Anyway, take a sell position here. You're protecting your trade up here. Market continues down. Take profit 1 at the previous low. And that is a 1 to 3. We talked about that on this session. At least a 1 to 3 risk to reward. 1 to 3.45 risk to reward. Take profit number 2. Well, actually, take profit number 1 could have been here, and then take profit number 2 here. Take profit number 3 would have been another prior low from before. Right? This was in May of 2021, and this was in February, prior low. So next take profit could have been the private low here, prior low way down here from January when we were at 30K before. So a lot of information. Hopefully those of us who are watching this are learning how to navigate TradingView really well after this, and also a beginner's introduction beginner's introduction to reading the charts. I just want to take a really quick look at the chart really quick to see if I see anything else that I could explain, but I don't believe so. Those are the basics, and that's what you need to know to help analyze your chart abundantly. Boom, move this over here. I got to add XRP USD. Probably use the same one, Bitstamp. Boom, buy some XRP. I can't believe this is only 62 cents right now. Unreal. So if you are watching this, I hope you got some value. I hope you're getting some value. If you're looking to get connected in the near future, let's definitely get connected on the Instagram. All right. There are people watching this on the Zoom right now. If you are watching this on the Zoom, definitely let's talk, reach out with any questions that you might have. Okay. How do I go back to my account? Boom. I don't want to leave anybody empty-handed. I don't want to leave anybody empty-handed. I don't want anybody to miss out on some sauce and some information. So if you do have questions and you're watching this and you're wondering how to trade, how to get started, how to navigate this area, definitely let's get connected and message here. And take care, guys. Have a blessed rest of your night if you are watching this. And manage your money. Manage your money well. Peace, love, and happiness.